Right, so look at this. This is absolutely insane. Look at this. This is a 15-minute chart. Bitcoin just absolutely, you can see it was trying to hold above that $20,000 level. It was trying to hold. Look at that 15-minute candle. That is insane. We are currently trading at about $19,000 right now for one Bitcoin. What is up, guys? Dirk here from Intelligent Cryptocurrency. What a day. What a day. Look at this. So the $20,000 level that had been holding for this time, that, seeing how weak the bounces were getting, we couldn't even sustain a $2,000 bounce, but from that initial touch of the 20K, and then we kept on bouncing. The rumors, which ended up not being rumors, about the insolvency of Celsius and 3AC, 3 Hours Capital, the fund, it just seems there's a lot of problems, and it finally all just came crashing down. As I shared in my last video, where I said, the thumbnail was like total market collapse, and we're pretty close to that. So let's dive into this video. Let me share my thoughts, because I do think this is the final phase of the bear market, the capitulation stage, as you can see with this huge candle. Obviously it's on a 15-minute chart, but nevertheless, that was just a big drop. And you could see the Bitcoin chart is still a 15-minute chart, but you can see initially we tried to hold here at 20,200. We had this bounce up to, we couldn't even get up to 22,000, right? So we couldn't even have a $2,000 bounce, and it came back here, it touched it, and you can see every time we had these lower highs, right? Lower high, and then here it double top, couldn't even do that. It sat here on that support, and then it just absolutely dropped. Okay, so obviously we have the same with Ethereum. Ethereum is finally down below that $1,000 price point. So as I predicted at the beginning of this year, we did see $1,000 Ethereum again, and now the question is, of course, how low do we go? Ultimately, nobody really knows. It depends how bad this contagion is going to be, what the solvency issues are, and really. But I think at this point, we're pretty close to a capitulation. Now, can it still go down? Yes. Can it go to 18, 17, 16, 14, 12, if things get really bad? But at this point, I would say the capitulation phase, we're either in it, it's either complete, or we still have maybe a little bit more to go. But this is what we were looking for, this massive downside below the level where people are just in disbelief. People are saying, oh, it could never go back below $20,000. That is what people believed, of course, that the price after a bull market peak would never come down below the previous bull market peak, which in this case of 2017 was about $20,000. We are now below that. So again, keep in mind, Bitcoin is only around for about 13 years now. So any data that we have, any models that we create around it are basically statistically insignificant. There's not enough data to prove, and every single time is different, right? The last bull market compared to now, we have a couple 100 million more participants. Things are different, institutions are involved. But again, the psychology of booms and busts remains the same. Human psychology remains the same too, where they get delusional with greed during the bullish periods, as we've seen with 3 Hours Capital, who took on loans and leveraged and doubled down, and now even a big fund like that with, I think they had about $18 billion under management, having these issues. And you would have thought, they've been in crypto since 2011, so they would know that there's possibility for a 4-year cycle and 80% drawdown on Bitcoin and a 90% plus drawdown on altcoins, and somehow they managed to ignore that, or didn't want to see it, or whatever the reason was. So you can see that even fund managers, no matter how prestigious they are, no matter their track record in the past, no matter how much money they have under management, it doesn't mean anything, because we've seen this over and over, not just in crypto, but also just traditionally in the stock markets. There have been all sorts of hedge funds, billion-dollar, multi-billion-dollar hedge funds that have blown up and become insolvent. And it just happens. It doesn't mean that just because someone has all this money under management and they have this, that they are always going to be right and that they always make the best decisions. So keep that in mind. Also, if you are learning about money and markets and things like that, and you're considering, maybe you should invest your money with a professional or a different fund or anything else like that, keep in mind these people are also just human. And I'll go to this in a bit more detail tomorrow in the weekly news wrap up. But basically also the funds are incentivized to take bigger risks with their money, because it's not their money, right? It's their clients' money, so they want to get the return. So they can often get fees and performance bonuses based on the return. So that's also an incentive with a fund for them to take more risk than they would if perhaps it was their own money on the line. Because at the end of the day, if they lose the money in their fund, they lose their customers' fund. Yes, they lose their reputation, and maybe there might be legal issues, but when you give them the money, you're basically giving them that money to invest, and you understand those risks and you sign the contract, etc. So if they lose it, well, it sucks. Maybe they lose their reputation, maybe they'll suffer in future in this specific financial industry, but your money's gone, and then they got their fees, they got their bonuses on the way up, and that's how it works. Anyways, that was a bit of a rant. So let's zoom out a little bit on Bitcoin and let's look at where the price could potentially go, what we're looking for to confirm a bottom and to confirm a potential reversal before we get any sort of new bull market. So this is the weekly chart going back here to 2016 on Bitstamp. It's good to see this. So you can see we are now quite a bit below the 200-week moving average. We have less than 48 hours for this weekly candle to close. And so far, we haven't really had a weekly close below the 200-week moving average. So again, that would be a new paradigm if we close this week. Now, if we end up pulling back to over 22,000 before this week closes, then I think it's going to be a pretty decent indicator that the bottom could very well be in, right? Like here we wicked below this 200-week moving average, but we pulled back and closed back on it, right? So if we can close back above 22,000 for this week, so within the next 48 hours, then this might have just been the same situation as March 2020, a wick below it, and then we could see potentially the bottom in and starting a recovery. Now, of course, that's not guaranteed. We could actually close below it, and then the question is going to be, how low do we go? And I think here, you can see this kind of horizontal support here at around 12,000, 12 to 14,000. There is a lot of touch points here, all the way back here to 2018, where it's more likely to be support at that point. So if we do drop that low, you can see here also there's a bit of an inefficiency at this level, where you can see the previous candle and the candle after this middle body. There's a gap between that, and potentially that could end up filling, but maybe not. So I think this week is going to be telling to see how this closes. Like I said, if we do manage to pull back to the 200-week moving average this week before this weekly close, that might mean the bottom is in. And if not, we're just going to have to wait and see, and maybe it goes to this level, and then we're going to have to wait for some sort of reversal candle. But at some point, the bottom is going to come, guys. So again, it is another sign of patience, and that is why it is really good to understand these moving averages. When we broke below this 50-week moving average, the likely target was going to be the 200-week moving average, unless we reclaimed it. This was a bit of a false break. We went back below it, and that was again a sign. Here it ended up creating a bear flag, if you want to call it that, but this fake breakout and move back below it, that was the sign that, hey, we are not done with this bearish trend, so now we are down over here. So now what I'm looking for is a reclaim and a close back above this 200-week moving average. If we can get that, then we can work on creating some sort of a base, and at some point, only eventually, when we get back above the 50-week moving average, as you can see over here, that happened in 2019, then we had a big run above it, and even here in May 2020, and then we had a huge run. That is when we start the next official bull run, okay? And obviously that's going to be a lot higher. You can see at this point it was $9,500, whereas the low was about $4,000. So it's more than a 2x of the lows when you get that confirmation. But you can see over here from 9,500, it still went to basically 65,000 and then 69,000. So even if at some point, obviously this is going to move down, let's just say it gets to maybe 38 or 37,000. Even at some point, if we reclaim that at 37,000, well, it's probably about 2x of the lows. But if at that point we start a new bull run, well, maybe we go to 100 and over 100 or over 200,000, and then even buying in the mid to high 30,000s would still be a better confirmation also. So keep that in mind. For now, what we're looking for is a reclaim of this 200-week moving average to start with, and then we can also look on the daily, and we can look for a close back above the 50-day moving average. But this is a bit of a shorter term average in terms of confirmation. And as you can see over here, it's closed above it, but then it went below it quite a bit. So just getting back above the 50-day moving average on its own, it's a start, but it isn't the be-all, end-all signals. I do want to see us back above this weekly 200-week moving average, and then only eventually back above the 50-week moving average, which could literally take quite a few months before we get to that point. So before we wrap up this video, let's have a quick look at the price of ETH, which is now trading at $993. So it went below the $1,000 mark. Okay, and that was the technical target potentially once we had the death cross on the daily chart. Let me show you that. We had that at the beginning of the year. I made the video about that. It's on the channel. I will link to it up here if you haven't seen it yet. But basically at this point, when we got the death cross, we could be looking for that, and that is exactly what happened. So again, it does pay to understand charts, to understand technical analysis, the moving indicators, because they can really help you with your decisions of when to enter, when to exit, when to take profits, or when to add on, and so on and so forth. So 200-week moving average is not that important for Ethereum as it is with Bitcoin, since it hasn't created that ultimate support. So often we have gone below it with Ethereum, and that's exactly what is happening now. So we are below this 200-week moving average. You can see that was a violent sell-off. I mean, it's just had, I think it's about 10, is it 10? Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 11th red candle, potentially 11 candles in a week. So you can see in bull markets, things go exceptionally well, and it feels like things just go up and up and up without any break. But now, in the bear market, you can see the reverse happens, and it happens even faster. It just sells off so quickly, and it's just a bit of a self-fulfilling prophecy also, because in the bull market, people leverage up. They take out loans, they put collateral in these DeFi protocols. I've been warning about that for months already. When Ethereum starts dropping enough, there's people who have Ethereum as collateral in DeFi protocols, and when the price drops enough, they're going to get margin called, they're going to get liquidated, which creates this cascade of selling off, because it gets liquidated, drops even more, and then people add even more collateral, but it still gets liquidated, and that's just brutal. Okay, so that's what we're seeing, this huge sell-off in Ethereum. And like I said, I also actually made a video about this. I talked about this at the beginning of the month in the monthly update video on the 1st. You can see it on the channel. I'll link to it up here in the description below. But I also said that I think before the bottom is in for Ethereum, we would see somewhere between $1,400 and $800, and we're getting pretty close to that $800 mark. I've talked about it a few times over the last few weeks, actually, in the video, and you can see that's around about this point. So this was the all-time high back in the previous cycle. We've gone below that, and quite a bit, right? But now the real support is more at this level, I think, which is around the $800 level. You can also see the inefficiency here, where the gap between the top of this candle and the bottom of this candle, if I zoom in, you can go and see it yourself in the weekly, but you can see there's this gap over here, and that kind of coincides with this level. So I think somewhere between $700 and $800 is potentially a level to watch for an Ethereum bottom. And if things get really, really bad, like we don't know how much liquidations there can still be, how many people still over leverage who have to, throw in the towel, or maybe there's still like a final wick down. So we could overshoot that temporarily to the downside. Like I've said before, a 90% decline like we had in 2018, that would be around the $500 mark. So even $400 to $500 in an extreme case is not impossible in Ethereum. But let's look and see what the $700 to $800 level will do, and if that will end up holding as a bottom for ETH. And once again, the same things apply. We're looking for at least a reclaim here of the 200-week moving average, and then we want to try and get back above the 50-day moving average. So something like this, with this sell-off, there's going to be some time before we really reaccumulate and start another massive rally. Personally, I'm thinking anywhere between 3 to 6 months. after we find this bottom, which I think we're pretty close to, where we get this final capitulation, which we're seeing now, then usually we have 3 to 6 months at least of kind of sideways and range trading to reaccumulate and rebuild a base before we get more of an extended rally or more of an extended trend going upwards once again. So there is still going to be time to accumulate and to position yourself. But now is the time when things are interesting. Now is the time when you want to learn about crypto. Now is the time when you want to get involved. Now is the time when you want to position yourself or plan out your dollar cost average strategy, and not during the euphoria of the bull market. You want to get it during the euphoria of the bear market, the capitulation, these bear market lows. That is the best buying opportunity, so that you can sell for big profits, 1 or 2 or 3 years later, when everyone else is only starting to buy in and getting euphoric at the very top. So this, while it may be catastrophic to a lot of people have lost money, maybe you've lost a lot of money as you're watching this, treat it as a learning experience and understand that right now is an amazing opportunity now over the next weeks and months to be able to accumulate and to learn and to sharpen your skills to be able to really profit during the next bull market, so that you have already positioned yourself, you ride the wave up, and you can cash out, profit on the way up when everyone starts getting euphoric, and then enjoy the next bear market. And maybe even in the next bear market, a couple of years away, then can even consider, learning how to trade, learning how to short, using options to make profits on the way down, and so on and so forth. And I'm actually going to be completely overhauling my trading and TA course for the Intelligent Cryptocurrency VIP members area. So that was there. It's going to be much, much better. It'll be done in the next couple of weeks, really to focus on technical trading, but also to be able to focus on how to trade both ways on shorter time frames, larger time frames, with leverage, without leverage. I've put in a lot of time over this past, say, year or so within the bear market to learn and to come up with a strategy and to test things. And I'm excited to share that. So if you are a member, of course, you will be able to access that in the members area. And if you are not yet a member, you will be able to sign up. It's the second link in the description down below. Come and check it out. All the TA, the trading, everything will be there for you. If you want to join and learn how to do that, come and join us. So that is it for today's video. Tomorrow, I will do a full news wrap up for the week, which has been quite a bit already. So be sure to subscribe and tune in tomorrow.